Welcome everyone to today's PACE webinar on understanding the most common cost allocation challenges. It's my great pleasure to have CostPerform CEO Sander Den Hartog as our presenter today. Sander is someone who I've known for quite a number of years now. It's my great pleasure to know him personally. We've, in this virtual age, it's becoming increasingly rare to see and meet people in person, but I've had the pleasure of going to CostPerform's conference, I think 2 years ago in Amsterdam, and got to meet Sandra in person. We've met in New York, where I'm located, and it's really always a pleasure to meet with Sander and have our very interesting conversations. And he certainly is one of the thought leaders in the cost and performance management space. So it's always great to meet you in person, but and especially here today as well, to hear what you have to say about this topic. So for those of you who aren't, and I also have to mention, it's always great to hear about your running exploits. It's not a marathon. I don't know what you call your long distance
It's long distance ultra running.
Ultra running. There we go.
I'll touch upon it a little bit in a minute.
And he has an ultra runner from all over the globe, I think. And it's certainly interesting to hear about all those exploits as well. But for those of you who aren't familiar with PACE, we're the Profitability Analytics Center of Excellence. We're a group of volunteers dedicated to helping organizations make more informed decisions by employing causal modeling into data analytics as described in our Profitability Analytics framework. If you want to become a member of PACE, it's free. You'll get access to all of our multitude of resources that will help you make better decisions within your organization. Just go to our website, profitability-analytics.org, and sign up. So here's a little bit of housekeeping that we need to cover. If you want to receive a certificate of attendance for today, make sure you have your actual first and last name when you sign in. If you need to edit the name that you used, click Participants, which is at the bottom of your screen, and then hover over your name in the list. Click the three dots, and there's an option to rename. Please note you have to attend at least 50 minutes today and answer the 3 polling questions that will be at the end of today's session to receive a certificate. The session is being recorded, so please keep your cameras off and your microphones on mute until the Q&A sessions. If you have questions, you can put them in the Q&A in the chat feature, and we will try to address them at the end. So over to you, Sander.
Thank you, Rafe, and thank you for the introduction. Let me get started. Let me share my screen. Share my second screen. There we go. Share, and that should give all of us the presentation. Rafe already introduced me as the CEO of CostPerform, and I wasn't the CFO of CostPerform all of my life, of course. I have been a little bit more on the consulting side in the past. I've spent over a decade at KPMG as a consulting. That's where I got to know CostPerform in the first place, and a lot of other toolings around cost management as well. And besides that, I have been having some leadership roles both in banking as well as in healthcare, but always on that crossroads of business and finance. That is a little bit my stronghold. And yeah, I've came across a lot of different applications of that cost management practice that I'm going to talk a little bit about today. On a personal level, I live in the Netherlands. That's where our company is hosted. We are a company now of 30 people, over 100 clients, usually very large clients. So think about in the US, for example, the Department of Homeland Security and Department of Defense, but also Texas Capital Bank. Thermo Fisher is one of our clients. Think about other places in the world of the Department of Finance of the United Arab Emirates in Dubai. We have clients like the Bureau of Meteorology in Australia. So truly global. That's why I travel a lot. And as Ray already mentioned, I try to combine my work with one of my hobbies, which is running. And that got a little bit out of hand because nowadays I run really far, not only 10Ks, 5Ks, or marathons, but that has gone as far as ultra marathons. Actually, as we speak, I'm heading off to next week. So at this time next week, I will be running 100K through the Swiss Alps, Swiss mountains. And that's going to take me probably, 24 hours of non-stop out there in nature. And to make a little bit of analogy, that's a little bit how it sometimes is of building cost models and cost allocation models. It is not something that you do for the short haul, but something that you really have to dig into and take for a longer period. Enough said. Let's dive a little bit into this world of these cost allocation challenges. Rafe already said, if you want to have some certificate of attendance, you have to be there for at least 50 minutes. Well, that puts a little bit pressure on my shoulders because I have to get you entertained for at least 50 minutes. I didn't prepare for the exact 50 minutes, but I hope I can. And otherwise, you have to help me out in the questions and answers in the end and ask me a lot of questions so that we can make it, because I was timing it actually closer to 35, 40 minutes, but we'll see how far we'll get. The topic of today is trying to understanding the most common cost allocation challenge. And I have a very specific slide that I'm going to spend a lot of time on and trying to get a lot of examples of that. But first off, is when I look at when I looked at the presentation, I looked a little bit of last year, because as you can see, this is the 2025, but I saw the 2024 version. I talked about modeling in 8 easy steps. And the reason why I bring this up again is not only to show that I've been here, several times on the PACE Profit Plus conference, but mostly because this ties in really, really well. The 8 steps that you have to do modeling, but actually the topic of today is what problems do you run into when you get into these 8 easy steps. So that's why I thought, hey, this is actually quite interesting that the topic that I chose 1 year ago ties in very good with the topic of this year. A little bit of introduction I'm going to give you on what the objectives are of today, and also a little bit about our company and what we are doing, what kind of common challenge that we are solving for our clients or helping clients to solve themselves. I'm gonna do a little bit of repeating of last year. I don't know how many people we have today that are there from last year's. If they are not here, then maybe they're gonna watch this later, because I understand that especially in the US, there's a very long holiday weekend coming about, and I know that in Europe it's the sort of tail end of the holidays that are still there. So there might be some people watching it later, and also for them it might be a little bit of repetition, but that's very necessary to get into these common pitfalls. And then last but not least, we'll get to that common pitfalls. Please pay attention, because I have prepared polling questions, and these are coming at the end. And yeah, although they're only 3, I would expect all of you to answer those 3 polling questions correctly. Otherwise, you would have your significant other, either your husband or your children, you have to serve them all day for the rest of the day with coffee and tea. Objectives of today. The objectives of today is I'd like you to understand a little bit more about our standard or a standard approach to cost modeling projects. And I'd like you to also be able to sort of identify and give examples of the common pitfalls. So I'm going to give you some examples, and I hope that you sort of be able to make those examples into your own specific situation and see where it works or where it doesn't work for your situation. And I also like to emphasize the fact of why tooling is important in this whole discussion. Not necessarily CostPerform, but tooling in general. But speaking about CostPerform, a little bit about us. We have, like I said, over 100 clients with all kinds of different industries. We are a generic cost allocation tool. That means that we've built an engine that is not specific for financial service, neither for education or healthcare or whatever other industry, but allows you to build whatever cost model is appropriate for you. It's based upon the work of, for example, Gary Kokens, who is very much attached and related to the costing, to the PACE initiatives. And it's very much related to the activity-based costing work that was done by Kaplan back in the 80s. And the way we have constructed is that whether you're BT, whether you're SBA, whether you're the National Bank of Belgium, you will always have costs, and those costs are actually being driven by resources, and those resources perform activities for you, and those activities are done because you have products and services. The whole simple concept of activity-based costing, we've built that in a generic tool, and it got a little bit out of hand, like just like the running. Because now we have all these clients all over the world with, and I gave this example of just 4 simple layers, but our average client has about 10 different layers where they would allocate their costs from and to, and our most sophisticated client has gone as far as 200 layers plus. I wouldn't necessarily say that helps in transparency, but technically not a big issue. And as you can see, we are good in financial services, government, and others. But the first 3, financial services, government, and telco, are by far our biggest industry. They make up 75% of our revenue nowadays, with all the other industries making up the other 25%. A little bit on our beliefs in costing. The reason why we are in this space is our mission is really to help organizations solve the toughest cost and performance problems. But what we've seen over the years is that what was a tough cost and performance problem this year is normal practice next year, or at least 5 years from now. And we've seen a multitude of clients that actually really grew in costing maturity. So everything we do in the development of our tooling is around, one of the beliefs is that organizations will actually continue to grow in that costing maturity, and a very like normal maturity level growth. And there's a beautiful article by Gary Kokens on maturity levels. But one of the maturity levels that we really see is that they would start out by pushing cost from their cost all the way down to their products and services. And then at the later stage of maturity, they make the other way around and think of volumes of their product and service that would actually drive their cost. So instead of pushing the cost down, it's pulling the cost through that model. That's one of the maturity steps. Other things that we see in maturity steps to make it capacity aware. Imagine if you have resources such as either IT capacity, machinery, but even people that work in an operational environment. There's a capacity attached to that, and making cost models capacity aware is another very mature step and gives you better discussions with your operational people. And so there's a lot of other maturity steps that go on, and we see a lot of different maturity levels within clients. That's why I always make the joke, and which is not necessarily a joke, it's actually the truth, is that none of our clients is using more than 60% of the software. Which doesn't mean that the other 40% is obsolete, no, not at all. But because there are so many different ways of looking at cost and different ways of looking at allocation, the tool has grown to be very feature rich and can handle all kinds of maturity questions and functionalities that are needed. So that's one of our beliefs, and we really strongly emphasize on that, and we want to make sure that you will never outgrow our tooling. The second thing that we have actually come across, and this is completely different than when I started, 6-7 years ago. When I started 6-7 years ago, calculating a cost price to do better pricing was something that actually was there. Maybe you would do it once a year, sometimes even only once every 2 years. And if you were really sophisticated, you would do it once a quarter. And although we see that coming back, we now see most of our, especially the newer clients, they would do this every single month. So based upon their actual data, they would calculate a cost price for that month for the services, for the activities, for the processes, and have proper discussions on that with the different areas within the organization. Well, that having said, um, building tooling for something that is done monthly is something completely different than building tooling for something that is done yearly. Because you could be fine if you have a 6, maybe 7 week project to calculate the cost price every year. What is it? Assembling all the data, and then have discussions on the allocation keys, try to define the right drivers, see where it's consumption based, where it isn't. You have the discussions, and then once you finally have the data, you would calculate it, and you would have your cost price, and you're done for a year. That's fine if you would do that. What is it, every year, and then spend 7 weeks on it. But you can't spend 7 weeks if you do it on a monthly basis, because there you will almost lose 2 months already before you have the data. So what we do on a second pillar of our development is making sure that as much as we can, everything is automated and is repeatable in a sense that you can really embed it in your planning and control cycle and have it work for you every month and as automated as possible. So that's a complete shift from like years ago where it was once a year. And there's tooling around that within our tool that I'll show you in a minute. Then last but not least is we believe that access to the costing info should not be restricted to people within finance. I mean, still, I come across a lot of organizations where the costing person sits in finance, which is fine, which would either be a business analyst or a business controller or a profitability analyst, or sometimes they even have like cost price experts. Really well done, but I always urge them, go out there, go out in the organization, because keeping those information points only at the finance organization doesn't really going to help you steer and make better decisions. Those information points should be out there at operations, at commerce, at whatever point is appropriate for your organization. So the third pillar we do in developing our software is making a very broad dashboarding tooling, and there's a little bit of AI involved to identify different cost areas very soon now. And I don't want this presentation to be a demo or things of our software. If you are interested, please hit me up on by email. I'll give my details later, and we'll plan that. Today is more about understanding the most common challenges. And to address those common challenges, and this is the last part that I'll spend on what our software looks like. We have actually broke it down into 9 building blocks, because every single, and we'll get to that in a minute in the 8 steps. These are the 8 steps. Every costing model, cost allocation, you will have to do some data collection. Then you have to model that data, and that has to come to actionable information. And that data that comes either out of your financial processes, there's a lot of financial data, but there's also a lot of operational data, commercial data on number of sales, and sometimes it's even regulatory data on what are eligible items that you have to report cost upon. Like I've shown before, we're dealing with the National Bank of Belgium, but we're dealing also with a lot of larger banks that have to report on cost on certain like predefined areas by a regulatory purpose to their regulator. If you have selected all the data, if you know what data to collect, then the thing that you would like most is to have that as automated as possible entered into your systems. So within CostPerform, we've built a pretty strong ETL tooling that allows you to extract, transform, and load the data. We have, of course, have a lot of API that you can connect with your certain source systems. And we have a data entry portal for that bit of data that is not available within your system. There's always that certain department or that certain area that if you would need driver data, or you would need some information on how time is spent, that is not available, and that allows you to get, and usually what happens within an organization, a lot of Excel files fly around, but in this specific situation, we would really urge people to get rid of those Excel files and have a workflow control data entry into this. Once you have all the data, you'd like to model that. I talked a little bit about ABC. There's also something called time-driven ABC, where you would use equations to really get to a very granular level on cost per activity. A multidimensional costing, whether it's capacity aware, I talked a little bit about that. Conditional modeling, so only allocate if certain activities belong to a certain a string, for example. We use that a lot. Loop allocation. The classical loop allocation is the reciprocal situation where you would have finance working for IT, but IT is also providing the laptops to finance. How would you deal with those costs? It's all included. Those are like the real end modeling functionalities. Since we are pretty good on certain, certain standard modeling, we hand out templates when it comes to TBM, where it is for IT costing, a little bit cost to serve for logistic companies, IFRS 17 for insurance, and we have a few more for people to start off with. But honestly, most of our companies, out of the over 100 companies that we have, it's over 100 different models. So nobody uses the exact same model. And last but not least, very important in this whole data modeling, how do you know every dollar is being accounted for, that it is being allocated? So we have a lot of validations in there that gives you cost flow checks, gives you a little bit of driver sensitivity, and we'll get to that in a minute in the pitfalls as well. Sometimes we see people really going at length to find the right driver information, but then when you look at driver sensitivity, then you'll see that it accounts for 0.00001 of the cost, and you think, it accounts maybe for 20% of your time to allocate 0.001 of your cost. Why bother? In that end. Missing links, obsolete cost objects, all these things are standard in our model validation part of the tooling. And of course, last but not least, to get to actual information, predefined report, some self-service reporting. This is where we're currently going to build some AI functionality in there, and that AI functionality should help you identify spikes, identify difference between different periods, and give you the right visualization for the what type of data. Other than that, you can also, and that's what especially our larger clients do, they would say, fine that you've calculated everything, but please give me all the data and I can connect to external tooling and use my own BI to make sense of that data, to make data into actionable information. So that's a little bit about our tooling and what are the kind of use cases that our client use it for. Well, the classical one is the product and customer profitability. We'll talk about most of that. Is whether you're a bank, whether you're a manufacturing company, or even whether you're a telco company, you would like to know my services, my products, which are the ones that I'm making money on, which are the ones that I'm bleeding money on. And this even holds for the government. I'll give you some example. One of our clients is the US Patent and Trademark Office. They have to calculate the tariff for a patent application or for a trademark application, and they are not allowed to make any profit. But nevertheless, they would really want to know, okay, what is the right pricing that I have to set for that patent and trademark to make sure that I'm not making a profit this year. And in their case, they're doing that now every quarter. So they change prices per quarter to make sure that they get as close to zero as they would like to be. A special case that we see growing quite often is, especially within like really large enterprise organizations, you would have a very large IT department, and everybody's of course complaining about the cost IT is handing them. So more and more over, we see a IT department being sort of a company on its own. So really identifying what are my products, what are my services, and what is the cost price for those products and services, and then really do a volume times price, unit costing and unit allocation out to the different environments. So a workplace has a single price, but even a seat of a proprietary system has a single price. So they go pretty far, and of course also help desk tickets, things like that. Those are in there. Regulatory reporting, I talked a little bit about that. We have seen, especially in the telco world, situations where there's a regulator telling them they are not allowed to operate as if they were a monopolist. imagine you're the incumbent, you're the only one having these really network towers around the country, and you can charge whatever you want for the new the new supplier that is actually entering that market. That's not allowed. So you have to sort of show back to the regulator that you're doing a cost price based pricing towards and we see that a lot in the telco market. Budgeting and forecasting, if you can look backwards, you can also look forward. Special case also is for tax reasons is transfer charges and corporate allocations. Imagine that you have different business units in different countries with different tax regimens. You're not allowed to do any arbitration. So you have to be sure that your transfer pricing is fair and transparent. And cost to service, especially for logistical companies, where you would like to know, okay, now that I know the cost price of my product and the factory, how much is it to get it to my point of sale, or to the not necessarily my point of sale, but to the different warehouses that it would go to. But these are all like common things that we see within our client base. From that client base, let's go a little bit forward to how we would approach a project to get a good cost price based model. Well, I've talked about this a little bit last year, and I said, well, please define it in 8 steps. Define your goal, get a great design, gather your data, then model it. And once you have modeled it, you get outcomes. Please validate that 9 out of 10 times. You have to go back to the data, or sometimes even the design, report on it, and try to automate it as much as possible. And throughout all these processes, document. And I've put that a little bit more in detail in this slide. And once again, if you want to have this slide, I think this is a really helpful slide here. Please reach out to me. It's very simple, sander@costperform.com. I'll have it in the last slide as well, and I'll make sure you get this presentation. But in that goal, one of the things that we see go wrong pretty often is that the goal wasn't clearly defined. So sometimes they say, yeah, I'd like to be more transparent, and then they've been transparent, but at the end of the day, they didn't want to be more transparent, but they wanted to be able to cut costs. Yeah, that's a little bit of a different goal than it is just to be transparent. Or they would say, okay, I want to be able to be more efficient in my operations. Then that would be a different goal than to say, I want to be 100% integral cost price ready. That's also a different question, because you could emphasize much more on your operations department, if that's your element, instead of making sure that everything is completely allocated if you want to go to integral cost pricing. So it's really like important to set up the model goals and involve everybody who's needed there. Then the most important part of any cost modeling is designing it. I've been in many situations there you would end up at step 5, you have your outcomes, and people would actually say, no, this is wrong, this is not what I discussed, I don't believe this is the right way, I think the costs that are allocated to me are too high. We've even lost quite some clients over that, because they thought it was the tools problem that the costs were too high. And then there's a sort of dynamic going on that the tools to blame, and they switch back either to something more rudimentary or simplistic, or they would switch back to Excel. And yeah, we would lose the client like that because the design wasn't properly done. And why do I say the design wasn't properly done? Because if you have an agreement on the designs, say for more or less the rules of the game, then if the rules of the game are like, that's why I say a sure sign off, if those are being committed to, then the outcomes are merely a result of the rules of the game. And then you could sort of still think that it's wrong, but then maybe there was something wrong in the rules in the first place that you signed off on in the beginning. But if everybody agrees that it's wrong, then you can go back. Of course, there's a little bit of iteration, but I always truly believe in a situation, if you first agree on the rules, then the outcomes are a result thereof, and they're easier to accept. Well, this is where I say spend your most of the time on, but this is where most of the time is spent, is really getting the data to do so. A lot of companies, they fall into the pitfall of trying to get 100% accurate data, because that simply doesn't exist. There's always like missing gaps, there's always missing, even our internal cost price a model to calculate the profitability per client or the cost per acquisition is far from perfect. We don't have the perfect data, and none of you have. But it's very important to strike a balance and say, okay, if I'm 80, 90, maybe 95% correct, I can definitely take better decisions. Remember that you're not on an accounting practice here, financial accounting, you're on a management accounting. You're trying to help management take better decisions. So don't go as far as you would go for financial accounting, but make sure the data makes sense. And determine your data. Sometimes you think of a beautiful allocation key. Let's give us an example. Yeah, I've seen situations in banking where they would say, okay, I would like to have the number of courses that my employees are taking be sort of a proxy for allocating all of my educational cost. Makes sense, eh? But then it turned out that they didn't actually properly register what all of the courses were of all the people. Yeah, then you come into step 3, you have identified in step 2, this is going to be the number, the driver that I'm going to use, but I don't have the data. Then you have to go back, okay, I have to choose a different driver. Once you've chosen, actually the building of the model, even in CostPerform, is not taking too much time. I always say, if you start from scratch, then probably doing this whole project takes you somewhere between 4 and 7 to 8 months. But the actual modeling, building it in CostPerform, if you have a little bit of a sophisticated and mature team, they can do that in 4 to 6 weeks. So this isn't the biggest step. It's before that is the biggest steps. Still, you need a little bit of knowledge for that, and involve the model specialist only. Don't let other people do this. This is where you do it by yourself. Then you have outcomes. You have to validate. I talked a lot about that already. Make sure you design that whole process of validating right. And then you can get to reports. Once everything is validated, you get to reports. I would always say, first make trial reports, have people look at it, and once everybody agrees on the format, because you always have to change a little bit of the format, then you would automate them in the process, and not only the reports, but also getting the data in of those reports. Try to automate that as much as possible. Having said that, once you have automated it, then you're actually done and you can do it. But you'll have to document everything. So you can always go back to those one pager with the model goals. Do we actually still are good on the goals when we look at the model and the validation that we have? What was the design we have chosen? What is the procedure for request for change? Make sure you have that all documented over here. It looks like, oh, I can easily follow those 8 steps. What could go wrong in this process? Well, I'll tell you, a lot could go wrong, and I've identified the unlucky number of 13, and that is because it is the lesson learned, the pitfall, the 13 pitfalls that I could think of for now that were going on. Well, one of the pitfalls that I see very often, and unfortunately also within our clients, that there is somebody within the organization, whether it is at the whether it is at the finance department, at a costing group, they really see the value of this, and they sort of procure CostPerform. We get very enthusiastic, but at the end of the day, there was no commitment at the top level. So there wasn't a CFO, or there wasn't an operational guy who actually also saw the value in there. And then it's doomed to strand at one point in time. Maybe you can survive a year, maybe survive 2 years, But if there isn't a commitment at top level, then it's very difficult to go through these motions and have everybody like lining up and getting the data ready all year. That's just not going to happen at that time. So make sure you have somebody who's your sponsor at the top level, and that can actually help you drive that through. And while I said that that sponsor will probably be responsible for one or multiple departments, um, we think that getting a good cost model could never be done alone by one department. They might be in the lead, but the responsibility should be at multiple departments. I'll give you a manufacturing example. Say for a situation that you're, I don't know, let's say that you're manufacturing these microchips. One of our clients is actually microchip. You're the semiconductor business. You're making a semiconductor. At that point in time, then you probably would have a department of finance that has all the data around. Okay, what is the bill of material of those different semiconductors? What is the machinery that is being used? What is the prices of that bill of material? But if you keep that all for yourself and try to model it, it's going to be very difficult, because what do you know as a finance department about the processes? And if you do know a little bit about these processes because they are kept in systems, how can you have the right discussions on trying to improve them on either efficiency or capacity? Make sure that you from an early stage involve the different departments. And a little bit of a jump here. I would always say, okay, start also therefore with a low risk, high reward pilot with management that embraces your idea. So pick a business unit or pick a product, pick a process that have people associated with it that truly believe in getting a cause and effect cost model that really want to go granular. So make sure you start with a low risk, high reward pilot over there. Another thing that we really see is the project governance of getting on board with such a project. We see that it's too often a one-man army, like I said before, and there's no like sort of learning effect being maximized. So we always say right from the get-go, from the beginning, make sure that you know how to learn in this project. That's why I always, when there is a consultant involved, and I've been guilty of that very, very often as being a consultant at KPMG. Very often, I would think of myself as being smarter than the client. So I said, oh, let me help you. I'll build your cost model out quite easily. And I would do that, be very quickly, and thought that I was doing a very good job for the client because they didn't spend too much money on the consulting. They were done quickly. But at the end of the day, learning effects within the department were really minimalized because I had never let the finance department or who is ever going to push the buttons and the other different departments, I've never taught them to really do it themselves. So make sure in that governance how you can come to a situation where you can sort of like have somebody who is a little bit proficient in both the modeling and the tooling, and so do it at first, let other people look, then let the other people do, and let your proficient person look over the shoulders, and then let them do it themselves, and sort of drive freely, and only use it as only use the consultant as a question and answer. Things like that, in hindsight, but I'm a little bit older now, I would have done completely different a lot of times. So think that project governance through, not only from who's in the team, but also from what is the process around. That really ties in with number 4. That's also much for myself. Make sure the client really increases his knowledge on and on and on. Not only about his own models, by the way, but also in, and this is a example of new possibilities in CostPerform, but in whatever tooling, because we evolve every, every 6 months. We have a release every 6 months. There are new functionalities in there. The example of the AI that's coming in, I'll have to really teach all of my clients to use that and that they increase in knowledge. And I'll be honest, finance people are not the easiest to teach. They love being on their own and keep doing what they're doing. They're not the most outgoing and researching persons. But that puts the pressure on us as being the drivers of these cost modeling to really help and assist them in getting to know about new functionalities, but also in a knowledge about costing that's out there. Number 5, I think I talked about it before. Establish the outcome of the goals of the projects at forehand before you really start. The desired application of your cost prices really determines the setup on how you do it. I talked about it a little bit before. Keep it simple. Keep it simple and solid, and find a balance between precision and ease of use. I have seen situations where people would go at length to really find out what the coffee machine's allocation should be for all the different departments. So they would come to me and said, I have a log file of who is using the coffee machine most. I was like, is that really the kind of granularity detail you're looking for? Yes, if you want to allocate workplaces and your IT cost, fine. But if you go as far as these kind of things, don't go. Similar thing is office supplies. Don't worry too much about those, I would say. But there are people that go too far in precision. But precision models create a lot of pain in terms of collecting the data. So the most precise model isn't necessarily the best model. And another thing that a lot of people get wrong is that they, even if they don't go that precise, they think, I should be completely, have everything done before I can get started. If you go back to those steps, they said, I need to have all my data before I can start modeling. So as if step 3 should be really completed before step 4. But I always say, no, just start with some rudimentary model, let's say 80%, and start improving from there. I mean, the best way to get somewhere is just to get started, is not to overthink it. And by starting, you come across a lot of challenges and you solve them along the way. So don't overthink it in the beginning. I think number 8, focus first on the model. These are, once again, the rules, and then only later at the numbers. Once again, make sure that the rules of the games are set. Number 9 is follow a structured approach with clear governance. So make tailgates that you want to go through. Have a proper project manager in place that has done some certification on project management, so you get clear governance. What is the steering committee's role? What is the project manager's role? What is the members of the project team's role? Make sure you have that. You have that right. And don't underestimate those step 5. Take extensive time for model validation and outcome validation. So you want to be able to do a lot of iterations and go back and forth and look at those outcomes so that everybody feels heard and that everybody has had a chance to see what things mean for them. Low risk, high reward, I already talked about it. And number 12, I can't stress it out enough. Document, get everything right. And then last but not least, and I've been emphasizing that more and more, also because of our clients that are emphasizing that more and more, make sure that you embed the whole cost price calculations in your regular planning and control cycle. So make sure that if you have your, the numbers being closed for the month, that one of the next steps is, okay, our finalized numbers should go in our cost price model. Next steps is, okay, report should be ready by then and then. And it is just going to be a regular planning and control cycle so that everybody within the company knows, okay, I'm getting my cost price on the 10th business day after month closure. And I can use that, and it's going to be included in the discussions on my performance for last month. Make sure that it's in there. Otherwise, it's only a party from the finance or the costing department. You would like to have it in there. That having said, I think I'm exactly at 47 minutes. Give you a little bit my contact details. Very simple, as I said, Sandra@costperform.com. In the meantime, I can answer one of the questions that Toby asked me. Of getting good data is still a major problem in implementations, or is getting better? Well, interestingly enough, it is getting better because data is becoming more available every single day. We see data coming available every single day, and companies are getting a lot better with the different tooling, data lakes, and everything, to being able to push that data into tooling like ours. So that's definitely getting better. However, as always, if data is getting better, demands are getting higher. So you're a little bit like in this rat race, which is still there, but it's definitely getting better. And the second question you had, do companies tend to keep these models up? Do you have a relaunch a project after a period of time? It's a good question. I would say, like most of our longer term clients, they still have like the basic idea of that of their model. So I would say sort of like the bones are still the same, but they have definitely gone up in maturity. So they've either become more granular, or they have actually sort of thought, okay, this was too granular in the beginning, let's go. But the basic ideas are usually the same. But what you see happening is if where they would stop at product level profitability, they sometimes go for multidimensional. So they say, okay, now I know not only my product level, but I know a client level profitability, and not only per client, but per channel, per product, per time period. So they would know a lot more. So that's what you see happening, is that the basic idea of the model stays the same, but they make it just more sophisticated. That's right. But funny enough, the second one, organizations should outsource design entirely to AI. I get a lot of questions nowadays saying, "Oh, but the design of my cost model, can I not just upload my data, and can I just say what kind of industry I am, and ask AI to build a good cost model for me?" The answer is not. Sometimes it's not too bad as a starting point. It's probably not good enough, particular for your situation. But I think the larger part of the consulting work that's involved in this could actually be like sort of prepared by AI. We do that very often. If I have to give a demo to an industry that I don't know, or a client that I don't know, I just ask AI and say, look, this is the kind of industry I'm looking for, a different type of resources, looking for a different type. Could you tell me what are like normal objects or activities in there, and what would be a normal way to allocate these costs? As a starting point, not too bad. Is it gonna work completely? No, of course not. So that's nice. IT teams, they always want to get to as soon as they can into the data. So they design. Why design? Logically, if there's an architect involved, he knows that design is very much the important. And some people hope that stakeholders will never have disagreements after the design phase. Unfortunately, that's the dreamland out there. Makes sense. Any other questions? I see the Toby question of AI integrating with the development of cost models. Well, I talked a little bit about that, both on the results and on the making the models. But any other questions that are there? I would like to be conscious of your time.
There are some questions in the chat. One is, what is your position on corporate sustaining costs? Should companies do full cost analysis or causal costs only?
Yeah, it's a good question from Daniel. It really depends on what you're trying to achieve here. If you want to go to integral cost price, because you need that, say, for example, that regulatory example that I used in the telco business, then yeah, you have no choice because they should be included, knowing that you can't influence them as much as you can, but they should be included. Other examples where you want to have them included is if you want to sort of make sure that these corporate sustaining costs, sometimes corporate sustaining cost, is something that can be influenced by the business as well. And then the question becomes, is it then still corporate sustaining costs? But for example, IT costs sometimes have been regarded as corporate sustaining cost. But yeah, having the cost price of a workstation, yeah, if you have less people, you need less workstations. So there is definitely an influence there. HR departments, making new contracts, learning and development, things like that. Yeah, those can definitely be influenced, but most of the time sit in corporate sustaining cost. So I wouldn't necessarily go too quickly on not include them because you cannot influence them. But if you really cannot influence them, yeah, it doesn't really make sense to include them in your cost modeling efforts because you can't. However, I would then always, once you have the cost price, make sure that this is sort of like the variable or the non-integral cost price, and then make sure that you can show them what the add up is for the corporate sustaining goals. And then from Carlo, I would prefer setting cost allocation before. If AI is ready for this stage, it helps. Yeah, it will be great. No, definitely. And I love these AI tools nowadays that you can sort of also validate, like, this is what I'm trying to achieve. This is how I formulate my goals. What would your suggestion be? In my opinion, ChatGPT is very good for being critical about the things that you've thought about yourself.
Here's another question that many of us have encountered. You've explained the challenges of costing. Do they differ significantly by industry, or are things mostly consistent?
Oh, it's a good question. I think they differ by industry, and I always like to make it oversimplify manufacturing companies because it comes from a manufacturing perspective. But if you have say for example that you're manufacturing a what is it, a peanut butter, a jar of peanut butter, maybe 85 or 90% of the peanut butter consists of the oil, the peanuts, the lid, the glass. And it's relatively simple because you have a large bill of material. Of course, there's machinery and there's like people that work on it, but sometimes yeah, you have a very large portion of your bill of material. When it comes to companies that do services like banking, like a government, then it's much more difficult because there is no bill of material of your bank account or a bill of material or of what is it, 1 minute of calling on your mobile phone. So yes, there is there are definitely different challenges over there, and one has to do with data, others have to do with the design of your model. Good question.
Uh, how do you see AI integrating with the development of cost models over the next 5 years?
Yeah, I think I talked about the AI a little bit, but I can still answer that. I would say it's a great help tool. I would say it gets you started, but you still have to do a lot of the legwork yourself, which is good, no problem. I see the most of the value in an analysis afterwards. That's where you can win a lot of time. But that's the way I see it in the next 5 years. If you ask me in 5 years, I might be completely wrong because I wouldn't have known it 5 years ago as well.
Thank you, Sandra. That presentation was very informative and interesting. I think we all got a lot out of learned about common cost allocation issues, and we'll be able to apply this in our daily cost and profitability modeling. We just want to thank everybody for attending today. Keep an eye on our PACE channel on LinkedIn, where you can learn about other webinars in this series. Sign up for our newsletter, and we'll let you know details about future speakers and the time of their presentation. Again, thank you all for attending, and see you next time.